Welcome to another episode of Your Money, Your Mission, the podcast designed to turn complex financial situations into actionable advice, powered by Johnson Financial Group. Today, we're going to get an economic update, and our guests are Dale Kooyenga, president of the Milwaukee Metropolitan Association of Commerce, and Dominic Ceci. He is our Chief Investment Officer at Johnson Financial Group. We're going to start with something a lot of our clients have been talking about, and that is the development happening in the Southeast Corridor. And so, let's start with you. Can you share a little bit about what's happening with that, what that means for Wisconsin as we look forward?
Well, Steve Case, who many people may know, who years ago started AOL and has been a very successful investor, he wrote a book called Rise of the Rest. And what that book talks about is that all this big money in the last 20th century was invested in the coast, right? The Bostons, the Silicon Valley. And what he said in that book that he published 4 years ago was the next part of our country to really see significant economic growth is going to be the middle part of the country, the rise of the rest, what the coast disparagingly call flyover country. Mm-hmm. And what we're seeing here in the Milwaukee region is what I call the hardware, meaning the software. And what I mean by that is two things, is that when you talk about the manufacturing process, the automation, the robotics, the AI, that is becoming more and more part of the IT component of manufacturing. And then when you look at what's being manufactured, mining equipment, anything that's being it also has an IT component to it, right? And so this is the place where the hardware economy is meeting the software economy. I always love telling the story that Milwaukee in the Native American language means the good land. And they call it the good land because it's where those three rivers converge. And right now, the rivers that are converging in Milwaukee in our economy is the software economy and the hardware economy.
And do you see further development? Are we exploring other areas in Wisconsin?
There's definitely further development. I have the privilege of being under NDAs, so I can know that there's further development without saying what the further development is.
Very good. And Dominic, what would you have to add?
Well, I mean, it makes a ton of sense because if you're doing developments, if you're trying to build out industry, you need resources. Right. You need land, which we have. You need water for various reasons, especially with the tech stuff. They need water for cooling, whatever. And you need a lot of energy. And these are all things that the coasts are having big problems with. And they have regular, disturbances in those things, especially like they have grid problems. It gets so hot out especially the West Coast. There's been brownouts and stuff forever. We don't have those problems, and we've got more land. We've got water literally falls from the sky here. Mm-hmm. They have big issues just finding drinking water out there. So why wouldn't you come here? Yeah. And if you're trying to cool down your server farm, just open up the windows, right? Mm-hmm. It's 30 degrees out right now. So I'm
going to add that just two different components. Labor is we have labor challenges. I mean, mm-hmm. the demographics in Milwaukee are not great, mm-hmm. But they're a lot better than other places in the country, in the world. Look at China, you look at Russia. I mean, we don't have great demographics, but we have okay demographics because of immigration. So it'd be really interesting to see what happens in D.C. We're rooting for some common sense immigration reform mm-hmm. because we need immigrants for our economy. The other thing I'll mention, which is really interesting from an investment standpoint, because when we're dealing with foreign direct investment, these are things that were not talked about 10, 20 years ago, which are being talked about today or should be talked about. And that is, you were just talking about if you look at natural disasters and you overlay natural disasters, and we don't have forest fires, we really don't have any tornadoes. We don't have hurricanes or cyclones. We don't have earthquakes.
Right.
We don't have you go down the list. Mm-hmm. But, and this is a little bit where my military intelligence officer hat is that, you look around the world and the Middle East today is a more dangerous place than it's been in a long time. You look at Africa and military coups and civil wars. After you thought Africa was going solidly middle class, it's reverting into these conflicts. Asia with North Korea and the rise of China. You look at South America with the rise of leftism, totalitarianism. And for crying out loud, Europe has the largest war going on since World War II. Mm-hmm. So when you're looking also when you're a foreign direct investment and you're foreign company and looking for direct investment, you have to look at America and you have to look at the center of America. This is a place we've never had any war. So you add on the natural disaster component. You also add on the component as far as this is a safe place to be. And mm-hmm. We have our politics. Everyone has their politics. But it's nothing like the politics in the rest of the world. So mm-hmm. this is just becoming increasingly a place where people say, if I'm going to invest billions, and by the way, Microsoft, Eli Lilly, those are billions of investment, mm-hmm. they're saying Southeast Wisconsin looks great.
So you mentioned the labor stuff as a sticking point for us, right?
Yeah.
And it's something that I've looked at recently, and I forget the exact dates, but I know, like, if you go back to maybe 2017, I think we had 200 unemployed workers, or maybe 250 unemployed workers for every 100 jobs. And now it's like the reverse, right?
Right.
It's like 50 unemployed workers for every 100 jobs. And our unemployment's really low, but it's low because people have dropped out of the labor force and all these other things. And we've had net migrations out of the state for some, like, almost a decade now. You know, it's kind of flattened out recently.
Mm-hmm.
Do you think, as you learn about all these projects and things, will those projects coming to our state be enough to draw people back in, or is there some other thing that needs to happen to get our labor force back?
What's always interesting is, because do companies come here because the labor's here, or do companies come here and then bring the labor with them?
Yeah.
Like, what's their relationship? And it's not very clear, but what is clear is that we've brought some marquee names of companies here. And when we drive them around town, they look around, they go to the Bucks game, or they go down by the art museum, or go out to Lake Country, whatever it is, and they say, we could recruit people here. Like, this is a place that is recruitable. We have the best community in the nation. I always say, as a father of four, this is a part of the nation where you don't have to choose between a career and a family. Mm-hmm. You could have your cake and eat it too. And so it's really interesting. Yes, we, for all practical purposes, have negative unemployment. So, I mean, are other people unemployed? Yeah, of course, there's always people that are in hard times, but a lot of what you see is transition unemployment. I remember years ago we had the fight for 15, and the fist and the fight for 15. And now it's like businesses will fight you to work for $15 an hour. I mean, definitely the tables have turned.
Right. So with that in mind, are there retention tactics that are being discussed, or that are unique or different here? What kinds of things are folks talking about?
Well, businesses should really pay attention to retention tactics. I mean, everything from, you better have a pretty good health insurance plan, you better have good retirement. But it's really interesting is, office retail space is down. I mean, we see that nationwide. Milwaukee's not as bad as a lot of other cities. But when we were talking to our members that are in the interior design space, their business is booming. And I was asking, like, why is it that there's less office space demand, but as office design places, your business is booming? And they said, because the post-COVID world, people are coming back to the office, and they want young people, young talent to be in the office, and they don't want to go back to a dark, dingy, 1970s filled type space. They want to go back to a cool space, and everyone's talking like, oh, we got ping pong tables and we got this in the walls. And so that's part of the attraction as well, is like, be a cool place to work.
And in terms of retaining employees in those workspaces, are you seeing more of them shifting to making spaces that people want to be at full time versus any kind of remote activity? That seems to be, we're seeing the advantage of that, getting together in the same space.
There's tons of momentum, people coming together. They want folks in the office. We're seeing that. I mean, even this is a local company, but companies, it's a great example, is when Zoom says that everyone needs to be in the office, you know that the office mentality works. Netflix is another one. So these companies that are in this digital space are saying people just don't create a culture online with even the best technology as they do when they are in person. And the right answer is to be in person. If you don't believe that, just look at student test scores during COVID. Is just every single aspect of what makes a culture, reading scores, math proficiency, unfortunate things like suicide rates, other health issues.
Right.
I mean, everything went in the wrong direction when we were isolated. And companies recognize this as far as culture, is we need to be together to be at our best. And so there's a huge momentum to be in person.
So with all of the advancement that we're going to have with some of these new companies, I would imagine, and I saw this with the Foxconn development, that infrastructure was going to become a really critical part of some of the things the state needed to focus on. Do you see further infrastructure projects that are going to kind of change the face of how things look here in Wisconsin for business?
It has to. And there's some great lessons learned from this big Microsoft win, because going back in history, it's why is Microsoft there? Well, Microsoft's there because there was a big, with a lot of fanfare, announcement that Foxconn was coming in, right? And Foxconn was going to create tens of thousands of jobs. It's going to be amazing. And that did not come to fruition, which is probably a whole other podcast to talk about why that is. But the fact is that all the infrastructure was laid there. And so when Microsoft in this AI space said, we need to go now, where are we ready to go? That plot of land was ready, which led to Microsoft's largest investment in company history outside of Washington right there. So there is something that said, if you have the infrastructure ready, then you're more likely to attract these big economic wins for your region. And so that's something that we need to, work with the state on and other regions there is a sense of build it when they come. That's a lot easier than pitching the company and then having to annex land and put in the energy lines and sewers and all that.
And we now have a perfect example of how that works.
Exactly.
In a very real way.
Exactly.
So as you shared with us that we are poised to bring in many new manufacturers and things are looking really good for Wisconsin, we also know that as we attract jobs and new people, housing becomes an issue. And we're right now in a housing shortage with some definite headwinds in that area. What are your thoughts on the housing situation for Wisconsin?
Well, it's interesting. We still have a very affordable place to live and affordable rents, but we're the second hottest rental market in the country behind Miami right now. And then also on the housing affordability, we don't rank very well right now. We're towards the top of that as well in the nation. So, and then the way it's a lot of that's how you slice and dice it, like the region, but we absolutely got to do more in housing. At MAC, we actually have a subsidiary called the Milwaukee Development Corp. We actually own apartments. We would like to do more of that work. So we actually don't look at this like as reading the newspaper about it. We actually live this, and we look at the cost of what will it be to actually build another apartment, because we want to do this kind of stuff in workforce housing. And it's just whether you're for profit or not for profit, you look at the numbers, the labor and the inputs, and then you look at what you could rent that out for or sell it. And the math just doesn't make sense right now. It's really, really hard. Interest rates going down would be helpful, but even if interest rates go down, it still doesn't take away that high labor cost and the high material cost. So I don't have a knee-jerk reaction right now. I mean, I think there's anecdotal things you could do. I mean, the city of Milwaukee is the mayor's trying to get through city council, is a plan to be more flexible in our housing zoning. I think that's part of it. I think there's things you could do from, at the state level to lower cost. But essentially, I think we need to get the price of materials down, which tariffs would not help because a lot of building materials come from overseas. But it's definitely something that we're paying attention to, pushing for policies that would lead to more affordable housing.
The other thing I wanted to talk about along those lines is people buy houses and spend their money when they're very confident in the economy. So what is your assessment, Dale, of the consumer confidence for a Wisconsin resident? And maybe, Dominic, you can also share some more thoughts on consumer confidence nationwide.
Yeah, the confidence is high in Wisconsin. I think it follows the national trends, and I think everywhere you look, you see that. I mean, what I found most interesting is the small business index of confidence just shot up drastically. The highest point it's been in nearly 4 years, which is tied to the politics. So it's interesting because I think we're going into a lot of uncertain times. The market is just unbelievable that everything's so high. It's all good news, but a little bit concern out there as well is that, when everyone's a bull, that's usually when the bear comes. So, a lot to watch out for.
Yeah, so I agree with what you're saying. I mean, just generally confidence is high. Small business confidence, like literally you can look at a date on the calendar and it went, boop,
yes.
went shot way up. And some of that, I don't know, it feels like people right now are just thinking about sort of the first order effects, and they're not thinking about the second and third order effects. We've talked about immigration and trade, and if some of this stuff happens, like then prices go up, and that could impact industries and all these things, and those are sort of second order effects, and you just don't really know yet. But the easy thing to look at is like, regulation, and what happened in the first term? Well, the stock market just went like this. Capital was easy to get. I could raise money. I could spend money. All these things. That's kind of the simple conclusion to make. It's going to be just like the first time, but there are these other things sort of lingering out there where they're bigger wild cards. Like trade is a huge wild card. It could be nothing, or it could be huge. You just really don't know. It depends on what gets implemented.
Excellent. So what companies, Dominic, do you think, given all that we know, are positioned to maybe do well in 2025, and those that might maybe experience some more headwinds? Is there sectors that should be thinking about things a little more carefully?
Well, so I would start from just a size standpoint, right? If you think about the new administration coming in, and you can look to the first term for clues, right? The cost of regulation is a big thing. There's lots of questions about other policies, but that one not so much, right? If you look at the cost of regulation during the first Trump term versus the cost of regulation during this Biden term, it's night and day difference. And so there's a pretty big expectation that cost of regulation will come way down. And that drastically benefits small and mid-sized businesses more than any other business. Because, the bigger you get, the more resources you have, and so it's just not as big of a deal. And that's like most of what's in Wisconsin is small and mid-sized business. I think we have maybe 8 Fortune 500 companies here in the state. It's like half of what our neighbors to the east and west have and a quarter of what's in Illinois.
We do have more per capita, though. Like, we're among the top of the nation per capita, but yeah. I agree completely, though, that we have this huge group of companies that are like mid-tier companies that are family owned, right?
Yeah.
Especially in the manufacturing space.
And it's almost like you can look at just how many employees they have. And right around that 500 employee mark, there's a study done on this, I don't know, in the last year or so, is sort of when you hit the maximum pain of regulatory burden. And so for those companies, like, they're really going to have a much easier time, theoretically, assuming that all these things get done, than they've had in the past 4 years. And so that should be good, right? They'll have dollars to deploy to other things that are probably more productive towards their business. So that would be good. Now, where you might have some difficulties, and you mentioned like immigration before, we don't really know exactly what's going to happen. We just know what's been talked about. And, if you get to the more extreme circumstances, like, there are industries that rely more on immigration than others.
Right.
Construction, agriculture, right? Like, they need migrant workers. They rely on them heavily, and there's a decent amount
cooks,
going on here.
house cleaning. But let me throw another one in there. Those are like the top 4 or 5.
Yeah,
But there's also software developers.
sure.
And so it's really interesting is if you look at immigrants, they're less likely to have a high school diploma. They're more likely to have a college diploma. So it's a weird breakdown when you talk about the types of immigrants and what our economy relies upon. And there's certain parts of our economy that will come to a screeching halt if we had no immigrants tomorrow. And that ranges from everyone who cleans hotel rooms and cooks in the kitchen to actually software developers.
Sure. So, Dale, if you had to pick Wisconsin's greatest strength and greatest weakness going forward relative to manufacturing and business development, what would those be? What would those 2 things be?
Right now, I'd say the greatest weakness is this non-attainment zone issue that we're dealing with. And that is that the pollution from Chicago and Gary pushed north. And so our region, as of Tuesday of this week, we're put into a severe non-attainment zone, which puts tremendous cost pressures on certain companies that have emissions because they're in manufacturing primarily.
Right.
That is an underreported story that is going to gain traction, in part because we're going to push the story, because this has to be fixed by the EPA. If you were going to plow every single building and every single road and every single house in southwest Wisconsin and plant nothing but ginkgo trees, I guess ginkgo tree is like the tree with puts out the most oxygen, you would still be in a non-attainment zone. So they're going to put, the EPA is going to require this costly technology. It's going to limit our economic development for something we have no control over. No control over because of the wind patterns from Chicago and Gary heading north. So I think that right now is our biggest challenge. Our biggest asset is just simply the momentum of our manufacturing industry that we have here, and the place that we also have places like Rockwell, a lot of like startup AI companies like Golgex, Rake. I was just at Delafield yesterday. And so we have these companies in the IT space combining with this manufacturing sector. And so I think that convergence is really our greatest strength. It's hard to pick between all our strengths, and there's some other weaknesses I did mention as well. But I think the best days from the region are ahead of us.
And Dominic, any thoughts about, from maybe even a more national perspective, what companies should be thinking about, or maybe what they're most concerned about right now?
Yeah, I mean, everyone's thinking about the trade stuff, right? That's a big deal, and it's a huge question mark. It's kind of a wild card for next year. Like, a lot has been said. Now it's what actually gets done, if anything. And tariff is the big word, right? And there's been talk of tariffs on, pick a country, but China is the one where it's probably the most certain that something happens, because there's already tariffs that were put in place the first time around. They never got taken off. In fact, I think some of them got increased. And, there's a lot of issues with China. And so I don't know that anyone is that concerned about putting more tariffs on China. That seems like a reasonable thing. Now, I don't know that they get to the 60% rate they talked about during the general election, but probably incrementally steps up 10% at a time until you get to some maximum pressure. And I mean, the goal is essentially to get manufacturing out of China to really anywhere else. I mean, preferably here in the United States. And hey, great, here in Wisconsin would be even better. Right. But I think anywhere other than China would be acceptable, is my guess, to the current administration. So China probably happens. You just don't know how much. And then you've got Mexico and Canada, right, as our like two really biggest trade partners other than China. And we've had discussions now, or you've heard, 25% tariffs on them. That could get really interesting. Now, what does that actually mean? Mm-hmm. I mean, it's probably just negotiating tactics at this point. It kind of has to be, because you don't actually have the president in office where he can do something about it. So you have at least another month of time to just figure things out. But you can just look at what those countries import to the United States and sort of figure out who would be impacted. Now, the first thing I would say is 75% of the imports from either one of those countries comes to us. So we are their biggest customer. So it doesn't put them in a great position, right? But Canada specifically, it's a lot of natural resources, tons of oil and energy-related stuff. But oil prices are so low already that I don't know, that just doesn't concern me that much, right? Like there's a lot of other pressures on the oil industry to keep prices low. So that's less concerning. But they do have like rare earth minerals and timber and things like that are inputs to manufacturing and building other things that those are prices that would go up if you implement tariffs, and then that probably gets passed through to consumers. So that's a little painful. And if you're in an industry that's using that stuff, obviously you got to figure out how to handle that. I think usually the price gets passed through, but not 100%. You're going to eat some of that. Mexico, it's a lot of autos and a lot of machinery and manufacturing equipment, that type of stuff. So that would be a big pain point for anyone that's in those businesses, and potentially would be pretty significantly impactful to Wisconsin businesses because of all the manufacturing that happens here.
Dale, any final words that you would like to share?
I'm really optimistic about Southeast Wisconsin. MMAC, we represent over 2,500 businesses in different capacity, and we just hear a lot of optimism. We like where we're going, and it's been it's a pleasure to serve companies like you guys, and looking forward to working for our region in the very bright days ahead.
Well, this has been really interesting. Thank you so much for being a guest with us
pleasure.
today. And Dominic, as always, thank you so much for joining us. And thank you for joining us on Your Money, Your Mission. If you have questions you'd like us to explore, please go to the show notes, type your question, and hit submit. And make sure you subscribe so you don't miss out on any future episodes of Your Money, Your Mission, the podcast designed to turn complex financial situations into actionable advice, powered by Johnson Financial Group.
This podcast is not a recommendation to buy or sell any investment or financial product. Whether a particular investment or financial solution is right for you depends on the facts of your particular situation. Please consult your own professional advisors prior to taking any action based on the content of this podcast. Wealth management services are provided through Johnson Bank and Johnson Wealth Inc., Johnson Financial Group companies. Additional information about Johnson Wealth Inc., a registered investment advisor, and its investment advisor representatives is available at adviserinfo.sec.gov. Not FDIC insured, are not deposits, may lose value.